privacy model that Canton has that institutions favor over some of these open, what are called like privacy pool models, where they might not know who the counterparty is when they're transacting in a dark pool. So at least from that perspective, which sounds simple, is another one of those just like obvious big reasons there's been a lot of adoption. I think why we're excited.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. Hope everybody had a fantastic weekend. If you are a father, happy Father's Day. Lots to dive into in today's video breakdown. We're going to thoroughly go through our private community report, giving you all the weekly outlook as we have a lot of scheduled data in the coming days ahead. Core PCE, the Fed's preferred gauge for inflation. To digest this upcoming week, we're going to go over some technical analysis on XRP. As you all heard, that gentleman just mentioned, by the way, that gentleman that you all were just listening to, let me backtrack real fast. That gentleman here is a representative from Temple Digital Group. That is an institutional trading venue built on the Canton network. And I really like that little tiny clip because he mentioned the terminology dark pools. So we're going to utilize our institutional software that we built in-house for you all here at CYPRX to go over those key levels to be mindful of on XRP, the total crypto market cap today, and of course, Canton. And you guys will have a full digest of what to expect this upcoming week, what could create bullish scenarios, what could create bearish scenarios, and what levels to be mindful of as we progress throughout the remainder of June. All right. So starting off here, as always, showing you all that here in the CYPRX community, we are aligned with institutional players. We're aligned with what the banks are talking about in their private reports. So you can see this report is from Signum Bank from June 19th, 2026. And if you thoroughly read the report, I'm not going to do so today, but just looking at the screenshot, it's talking about the hawkish FOMC. It's talking about the US-Iran events that took place and energy prices and so on and so forth. And I tagged our June 18th report. So we wrote this the day before Signum Bank, where we literally were talking about the same exact things. I'm showing you all this so you can see that here at CYPRX, we are aligned with institutional information. We're constantly pumping out these private community reports on a daily basis to our community members inside our Discord. As we read through this, you guys are going to see, again, keeping you all in the loop and keeping members of our community informed. This is the type of information that you want to be aligned with and paying attention to in this current market environment. With that being said, heading over to what was trending on Twitter this weekend. I saw this little tiny post over here in this what's happening feed over to the right-hand side, and there was a little tiny screenshot here, and it says XRP price prediction was trending over the weekend. And so I said here, I've been in crypto for over 10 years and a 7-figure trader for the last 4. In that time, I've watched countless XRP price predictions, moonshot forecasts, and influencer targets dominate social media. Now, I believe one day that XRP's price will be at a higher level, but the reality is the predictions year after year never play out the way people expect, and many traders end up chasing narratives instead of following actual market activity. That is one of the reasons why we built CYPRX. Instead of relying on hype, opinions, or viral predictions, which all suck, by the way, we focused on what institutional participants are actually doing. Our institutional grade software tracks real dark pool activity, delta imbalances, liquidity shifts, and institutional volume flows, giving retail traders access to information that was traditionally out of reach. The market does not move because of social media predictions. It moves because of volume, liquidity, large positioning, and capital flow. CYPRX was built to give retail participants the level playing field that they've always deserved. The tools are there, the data is there, the accuracy is there. Unfortunately, many traders will continue following trends and influencers while ignoring what the market is actually telling them. The biggest edge in today's market is not another year of false predictions. It is seeing what the institutions are doing before the crowd does. And so I updated you all with our most recent institutional levels from inside our private Discord that our in-house institutional scalper generates with our software so that you all publicly have access to them. But if you want updates to these levels on a daily basis, because they are updated daily, then head over to CYPRXtrading.com. We'd love to have you on the team. And the reason why I played this first video clip is because this shows you all that an institutional participant is talking exactly about dark pools. All right. So I thought that that was interesting to kick off today's video breakdown. Let's dive into this report. Let's get you all educated. I love typing these out for the private community members. Again, I hand type these out every single day as we transition over into Asia session, i.e., a new daily candlestick printing, so that our members are in the loop with what to be mindful of and pay attention to. This is our June 21st report, giving the entirety of the market outlook for the week ahead. Last week, always, of course, recapping what took place, was another reminder that markets remain trapped between two competing forces: improving geopolitical developments and increasingly restrictive monetary policy expectations. Let's zoom in for this so you can see it. While equities managed to recover a portion of Tuesday's sharp sell off, neither stocks nor crypto were able to reclaim the critical levels needed to confirm a meaningful trend reversal. The NASDAQ, I talk about the NASDAQ because the vast majority of traders in our community are people that trade NASDAQ, attempted to push back towards institutional resistance, but ultimately rejected the 3743 dark pool before the weekly close. As for the broader cryptocurrency market, faced similar fate. We rejected the $2.3 trillion dark pool, and we fell to a weekly low of around 2.18 trillion, as you all can see here in this screenshot. So that is where we're going to pick up today. The failed attempt to push back into the weekly high matters. So as you all can see right now, the weekly low in the total cryptocurrency market comes in at about 2.12 trillion. The weekly high coming in just under the dark pool at 2.3 trillion at around 2.29. The failed attempt to push back into the weekly high matters. When buyers are generally in control, markets typically expand through resistance and build acceptance above key levels. Instead, what we witnessed throughout the second half of last week looked more consistent with profit taking and short covering rather than aggressive institutional accumulation. The rallies lacked follow through, momentum stalled into resistance, and sellers quickly defended whenever price approached premium levels. As we begin a new trading week, the market remains at a critical crossroad. The question is no longer whether buyers can produce temporary rallies. The question is whether they can generate enough conviction to overcome mounting macroeconomic and geopolitical headlines. So, on the geopolitical narrative, Iran, Israel, United States, Hezbollah, all these places, that narrative is far from over. Heading into the week ahead, geopolitical developments surrounding the United States and Iran will likely remain the dominant driver of sentiment across global markets. Although investors initially welcomed the memorandum of understanding signed between Washington and Tehran, the situation has become increasingly fragile over this weekend. Vice President J.D. Vance arrived in Switzerland alongside Special Envoy Steve Witkoff and Jared Kushner to continue negotiations surrounding Iran's nuclear program. The agreement currently provides both nations with a 60-day framework to negotiate a broader resolution while temporarily removing sanctions on Iranian crude oil exports and reopening critical energy routes through the Strait of Hormuz. Now, initially, markets interpreted the agreement as a de-escalation event. Oil prices last week declined, risk assets stabilized for now, and investors began removing some of the geopolitical premium that had been embedded into energy markets. However, the optimism did not last long. Renewed fighting between Israel and Hezbollah in Lebanon immediately threatened the stability of the agreement. Iranian officials have made Lebanon a key condition in ongoing negotiations, arguing that continued military activity violates the spirit of the ceasefire framework. President Donald Trump further complicated matters over the weekend by issuing an aggressive warning towards Tehran, stating that the United States would respond forcefully if Iran failed to restrain regional proxy groups. At the same time, several U.S. officials have publicly discussed the possibility of imposing tolls on shipping through the Strait of Hormuz if negotiations fail, while others have gone as far as suggesting direct American control of the waterway under certain scenarios. Now, this dramatically raises the stakes for markets. Any threat to its stability immediately impacts inflation expectations, i.e., the stability of the Strait of Hormuz, energy markets, bond yields, and ultimately monetary policy expectations. So, what headlines matter the most this week? Here are our bullish de-escalation scenarios for risk assets to continue their momentum higher. Markets will likely respond positively if we see nuclear negotiations continue to progress, Lebanon tensions cool, energy shipments continue flowing normally through Hamas, oil prices remain under pressure, sanctions relief remains intact, and the U.S. and Iranian officials continue to constructively connect with dialogue. Under the scenario, inflation concerns would likely continue to ease, bond yields could stabilize, and risk assets such as stocks and crypto would likely receive additional support. Now, the bearish escalation scenario for the Iranian tensions. Markets will likely become increasingly defensive if talks begin to break down, Lebanon conflicts expands, Iran threatens Hamas closures, which turn into U.S. escalating attacks, oil prices resume climbs aggressively, back above $90 per barrel, new sanctions emerge, any military rhetoric escalates from either sides. This would immediately reignite inflation fears and strengthen the argument for additional central bank tightening globally. And we'll get into these scenarios when we go over the TA today on XRP, total market cap, and Canton. Now, specifically taking a look at the dollar and why the dollar matters more than most traders realize. Beyond geopolitics, the most important macro relationship to monitor this week remains the relationship between the dollar index and the U.S. 2-year Treasury yield. Over the past month, changes in the 2-year yield have maintained one of the strongest correlations with movements in the U.S. dollar. The relationship is critical because a stronger dollar typically creates tighter global liquidity conditions. And historically, crypto performs best when liquidity conditions expand, not contract. And crypto, we know, tends to struggle when, of course, liquidity conditions contract, i.e., the central banks taking money out of the system. At the moment, traders are increasingly pricing in the possibility that rates may remain elevated much longer than originally expected. The Federal Reserve's July meeting remains weeks away, but markets are already pricing approximately 10 basis points of additional tightening. If the decision ultimately comes down to either no change or a 25 basis point hike, current pricing implies roughly about a 40% probability of another rate increase. That percentage matters. That number will be one of the most important variables that we monitor throughout this week. Ideally, for risk assets, we want to see incoming economic data keep the probability of rate hikes near or below that 40% threshold. Any data that pushes those odds towards 50 to 60% or even higher would likely trigger additional pressure across crypto and speculative assets as markets begin pricing in tighter monetary policy heading into 2027. Now, the Warsh effect. Last week, we had FOMC meeting, which changed the entire conversation. Many investors entered the meeting believing that the new Fed Chair Kevin Warsh would lean towards rate cuts relatively quickly. Instead, markets received the opposite message. Warsh doubled down on inflation control, refused to provide detailed forward guidance, and emphasized that restoring price stability remains the Federal Reserve's primary mission. Even more importantly, several Fed officials now openly acknowledge the possibility that rates may need to move higher. This represents a major shift in market psychology. For years, investors became accustomed to a Federal Reserve that carefully guided markets towards easier policy. Warsh appears willing to tolerate more uncertainty and provide fewer hints. And we know that markets dislike uncertainty. Crypto especially dislikes uncertainty. That is one of the major reasons risk assets like crypto continue struggling despite occasional relief rallies. Now, this week ahead, with PCE inflation, which is going to be the most important economic event, in my personal opinion, of this week in coming days. While markets will receive numerous data releases throughout the week, none carry more weight than the Thursday's PCE inflation report. This is the Federal Reserve's preferred measure of inflation. Consensus expectations right now suggest that the PCE report will be the key economic release, and right now, PCE inflation is set to be seen rising by 0.5% in May, up from 0.4% in April, while the year-over-year rate is also projected to increase to a 4.0% from a 3.8%, and core PCE is also expected to rise by 0.3%, up from a previous reading of 0.2%. Also, the annual rate, geez Louise, is also expected to increase to 3.4%. So, here are my scenarios for this week ahead in regards to inflation. The bullish inflation scenario for risk assets would be if core PCE surprises lower or closer towards 0.2% month over month, or if any parts of the inflation show that the market inflation came out lower than previously expected. Markets would likely interpret that as evidence that inflation pressures are beginning to cool or not accelerating as previously priced in. Rate hike expectations would likely ease or at least wouldn't increase. Bond yields could fall. The dollar could lose some of its recent strength. And crypto and equities would likely benefit from that overall environment. The bearish scenario, something to be mindful of for further downside targets, especially in XRP. If core PCE prints at 0.4% or higher, markets may conclude that inflation remains significantly above the Fed's comfort zone. Rate hike probabilities would likely rise sharply. Bond yields could accelerate higher. The dollar would also likely strengthen further, well above the 100 round psychological level marker that it's currently trading at. and crypto would likely face another wave of selling pressure. One area deserving particular attention is durable goods inflation. Historically, durable goods have acted as a deflationary force throughout the economy. That relationship appears to be changing. Durable goods inflation is now running near 3.4% annually and accelerating. If that trend continues, it would suggest that inflation pressures are becoming more deeply embedded throughout the economy rather than remaining concentrated in energy. That would present a serious problem for risk assets because it increases the likelihood that current policy is not restrictive enough. Before we get into the technical outlook, one thing that I did not incorporate in this report that we will talk about inside the private CyPRX community this upcoming week in future Zoom calls is the possibility of continued yen interventions that might create FX volatility, and it could also trickle into risk assets. So any unwinding of yen carry trades because of aggressive yen strength due to interventions or any type of rhetoric from Bank of Japan speakers or Japanese data, of course, is something we need to be mindful of as risk asset investors and traders. So as for the technical outlook, let's first start with XRP. So that way, you all that have been patiently waiting for me to get to this point can have the TA update. So right now, XRP continues holding above the $0.07 dark pool and the $1.11 delta, with which, if you guys remember in the updates that I gave you all back just a few days ago, those are the most recent levels from our June 7th update. All right. So coming back over here to the analysis. For now, buyers deserve credit for defending these areas. However, the larger concern remains the aggressive rejection from the dark pool at $1.18. That rejection tells us right now that sellers are still in control of premium pricing. As a result, the recent bounce that we've seen from $1.07 to $1.11 could simply just represent profit taking from short positions rather than genuine institutional accumulation and demand. The bullish case remains very straightforward. If buyers can reclaim $1.18 and successfully convert it into support, XRP could begin a meaningful recovery back towards $1.29 and eventually $1.36 as our next bullish hurdles before we expect any higher prices. So here is the overarching bullish scenario for XRP this week. That is, if we hold above $1.07 to $1.11, turn that into support, and then we can see a sustainable break and hold above $1.18, then we can see a meaningful attempt to make a recovery towards $1.29 to $1.36 to overcome all this previous sell pressure over to the left-hand side from previous weeks for our first targets. If we can break above $1.29 and $1.36 in a very optimistic, enthusiastic environment where risk assets flourish, our second targets to the upside, I'll throw those in there, are going to be anywhere between $1.57 and $1.62. Now, again, these are institutional dark pool levels. This is not Cyprus drawing Fibonacci's or predicting XRP's price. These are institutional liquidity pockets that are literally picked up by our institutional software and given to our private community on an updated basis. So again, this is not my overarching opinion. This is institutional analysis, paying attention to where liquidity sits in the market via an institutional perspective. Now, until this scenario occurs, rallies should be treated very cautiously. To the downside, $1.07 remains the final major defense zone for buyers. A break beneath that level would expose XRP to significantly lower prices that we haven't seen in well over a year, with the major support zones located around 91 cents and potentially a drop towards the dark pool at 69 cents. And so here is the bearish scenario on XRP. If we break below $1.11 and we see bears hold price beneath $1.07 and start to close beneath it, creating $1.07 as a resistance, or starting to see $1.07 act as a resistance where buyers cannot break sustainably back above it, that is a very extreme cautious right there signal. And the most likely path of least resistance after that is going to be a drop down into the next dark pool, which doesn't come in until roughly around 91 cents. Beneath 91 cents, in my personal opinion, if we see price drop below $1 and come into that 91 cent threshold, I don't think market makers are going to stop there to grab up some XRP at a discount. I wouldn't be surprised if sellers gain the upper hand at that point and we see 68 cents come into fruition. Now, for me personally, not financial advice, I bought most of my XRP at around 11, in between 11 and 27 cents. So if we see 68 to 91 cents come into fruition, XRP will be discounted for my overall long-term bag holding positions, and I will start to look for heavy accumulation at around those levels. So again, just something to be mindful of. I'm setting alerts and alarms in case those levels are met. All right. Now, before we jump into the total cryptocurrency market, real fast, let's just take a look at Canton's price action. Canton's price right now, as you all know, we have been seeing this institutional participant defend passively this 17-cent threshold literally for the past 6 months. There is a huge institutional participant that is stalling price at 17 cents. You cannot show me another chart that looks like this accurate, right? This is on the daily chart. We could even go up to the weekly and we can see that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks over the last 6-month period, we have seen 17 cents act as a resistance on Canton. So for the bullish scenario first, as long as price can trade above the dark pools at the 13,916, which is this most recent base on the weekly, as long as we can hold above the 13,916, then we're likely to see price continue to consolidate within this range between 13 cents and 17 cents until buyers regain control with enough volume and momentum to break the passive seller at 17 cents and take price higher. Obviously, of course, the second scenario would be defense, buyers throwing up that defense at around the 14,801, which has also acted as a support in the past, where we've seen aggressive buying activity at around that psychological level as well. These are the only two bullish scenarios right now on Canton, and personally, I'm not expecting any major breakout on Canton until we can see buyers, or let me put it this way, until we can see the sell volume at 17 cents turn into buy volume, then only and only then will I get excited about higher prices on Canton. All right. So until then, I'm personally expecting a drop on Canton's price into the lower level dark pools. With that being said, my bearish scenario underneath of the 13,916, which is going to be that last line of defense for the most recent buying activity that we've seen. If the 13,916 does not hold, that is going to open up the door for a revisitation of this base here. The base of this weekly candle comes in roughly in between the dark pools at around the 11,021 and the 12,361. So that is where I will start to accumulate some more Canton, especially considering that I got most of mine at around 6.5 cents. So that would open up the door for me to start dollar cost averaging in at a discount. And that would look something like this: a failure to break above 17 cents, a break beneath the 13,916, and then that would open the door for a bearish close below the 13,916, and where we would start to likely see sellers target the 12,361 to the 11,021 as our first and second bearish targets. So now that you all have targets on both Canton and XRP, real fast before we head off here, let's just take a quick look at the total crypto market cap. Right now, crypto remains trapped beneath the $2.3 trillion dark pool after rejecting resistance once again. For buyers, the immediate objective is simple. We need to see price hold above 2.08 trillion and defend last week's lows. If buyers can maintain control above these levels, a recovery back towards 2.3 trillion remains possible this week. So here's our bullish scenario on the total crypto market. Last week's lows come in at about 2.1 trillion. As long as we can hold above that $2.1 trillion threshold, previous weekly lows, last week's lows, then it's possible for us to see a meaningful attempt back towards the dark pool at 2.3 trillion. To the downside, which is, in my personal opinion, where the market is currently skewed. Again, I'm a fundamental and technical analyst, and right now the fundamentals do not scream any meaningful or bullish recovery on crypto until something changes. So, a failure to hold support would significantly weaken the bullish structure. A break beneath last week's low would place immediate focus on the $2.05 trillion threshold. This means that is the final line in the sand for buyers. So $2.5 trillion dark pool, that is the last line of defense. If 2.05 trillion fails, sellers would likely regain complete control of short-term momentum, and we would likely see a possible much lower price on the total crypto market cap. For now, 2.05 trillion remains our first bearish target, but overall, we'd be looking at targets as low as 1.81 trillion and 1.74 trillion, where we have seen some buy dark pools highlighted at those areas of interest. With all of that in mind, remember, none of this is financial advice. However, if you all want level-headed accuracy, real-time updates, day-to-day information, keeping you all accurately in the loop with what's happening in real time with fundamentals and institutional levels, head over to CYPRXtraining.com. We'd love to have you on the team. If not, we hope that you all enjoyed this public update. Many blessings to you guys and gals out there. Be mindful of the things in the coming days ahead that we talked about in the fundamental report today. If you all enjoyed this, smash that thumbs up button, subscribe to the platform. We'd love to have you inside the private CYPRX community. I'll see you all in the next video breakdown.